is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Clearwater. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. Well, you're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Well, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We're here 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Don't take anything personally. Transform your life. When you refuse to take things personally, you avoid many upsets in your life. Your feelings of anger, jealousy, and even sadness will simply disappear if you don't take it personally. Market-wise, let's take a look at it out here. We have the Dow Industrials up 129, NASDAQ up 25, S&P's up 4.5, gold contract up $15.90, trading at $12.57 an ounce. Silver up 43 cents, $16.10 an ounce. Both got wide price spread. Big bids, bottom line, higher price, here we come. Copper up 3.5 pennies, trading at $3.03 a pound. Light sweet crude down 49 cents, $56.67 a barrel. Notes and bonds, folks, they are just the ever-ready bunny. They just won't back down. The Fed is going up. Well, they went up 25 basis points. They say they're going up 3 times in 2018. But guess what? Bottom line, more demand than supply in both the 10 and the 30. They're moving topside with volume. You get the 10-year up 13.6, 124.17. 30-year up a full point, 153.18. And King Dollar's down 645 ticks, 93.05. The euro's trading at 118.25 to the U.S. dollar. The yen is at 112.5 to the U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at it. What do you have out here? We're at all-time highs. The SPY is trading at 267.25. Bottom line, that's an all-time high. Dow Industrials, same type of setup. When we look at the Dow Industrials are up 122 bucks. You're at 24,626. You've hit 24,666 out here today. Now, NDX 100, NASDAQ Composite, different animal. Just can't catch a bid. You get the NDX up 20 bucks right now. You're at 64.03. Your high out here is 64.26. We hit 64.16. If we go into the future market, we take a look at the NDX 100 futures. What you're going to see here is that we've got 2 separate spikes. We had the first spike this morning. That spike got us up to 64.37. That was at 9:30. You came back up and you tested at 11 o'clock. When the Fed meeting came out with the announcement, it got up to 64.32. It looks to me like as we come into this close here, what you're going to see is that this thing is going to basically close somewhere underneath this 64.27. And what that is the high of Monday. That's how this is shaking out right now. We'll see whether they basically sell that baby down into the close. Gold contract caught the bid. Bottom line, gold contract had gone into the strength from the 14th of July yesterday. It had rejected it, had lighter volume, catches a bid now, goes up, has the wide price spread, has the volume. Bottom line now, we're going to see gold's going to make a run for somewhere into the 1273 first. You're at 1256. We get follow through like this. Bottom line, you'll be right up into this 1312 area. If we go over to the GDX, you'll see the GDX, same type of setup inside the GDX. GDX is up 77 cents. GDX had gone into the July 10th high, rejected it. You're up with 39 million. The GDX is going to do some numbers out here today. So we're at 22.19. It already hit 22.31. And what's impressive about that is that that would be getting you in a higher range, and we're going to do the volume. Right now, at 39 million, that number you'd like to get over is the 51 million. The way that the GDX is trading right now, I expect we're going to do that, because what does happen, folks, is that the GDX gets huge amount of volume coming right into the close. That's where they get the net asset value straight. We go over to the silver market. What the silver market has done out here is this. Silver right now is up 2.6%. That is up 40 cents. Silver is always more volatile than gold. Silver also caught the bid. Silver is, let's see, we get 80,000 contracts. That's good contract volume. You get the price spread. So silver, I suspect, is going to make a run to 1665, and right now we're at 1607. Notes and bonds, they just don't stop. Pretty amazing watching them shake out. So note market, what we had done yesterday is that we did just over 1 million contracts. We did 1.1 million contracts. It had been going into 3.1 million as well as 2.5. Rejected it. Today, you got 1.5 on the way up. This 10-year is on its way to 125.14. 30-year, same type of animal. 30-year was showing us yesterday. What that did is that the 30-year had rejected the highs of the low bar going back to the November 30th level. 30-year out here, we've done 278,000 contracts. You're over the swing highs. 30 years making its way up to 156.14. When you do take a look at these yields here, what you have with the yields, the 10-year right now is 2.355, and I believe that's going to be right in the middle of the range for the last year. Yeah, it's smack dab in the middle. 2.03 is the low for the last 12 months. 2.62 is the high. We're at 2.335. We go take a look at, I know a few of the traders want to look at the WIRP. This would be the Fed Fund Futures rate. There's another way that you can do this, which is pretty cool, DOTS. This is what the Fed, yeah, there it is there. So what this is the Federal Reserve, they call it, it's the implied Fed funds target rate. This is the dot map. And this dot map basically lays out where they think rates will be coming into 2018, 2019, 2020. It's kind of wild how this thing works. But anyway, what you have with 2018, at the beginning of 2018, it looks like it's about 2 to 2.5. By the time 2019 comes, they're saying at this point it's going to be about 2.75. This is Tom O'Brien. This is TFNN. You stay right there, folks. We come right back. We have the Dow Industrials right now trading up 129. NASDAQ is up 25. S&Ps are up 4.5. We're coming right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now up 123. You get the Nasdaq up by 28. S&Ps are up 4.5. Bottom line is that you get Federal Reserve followed through on their expected rate hike. Here's a quote from Janet Yellen. This change highlights the committee expects that the labor market will remain strong with sustained job creation, ample opportunities for workers, and rising wages. Chair Janet Yellen told reporters Wednesday following the decision. And a key change to its statement announcing the decision, the Federal Open Market Committee omitted language saying that it expected the labor market would strengthen further. Oh, that's interesting. So that is why you saw gold take off like a rocket ship on the way up, dollar gets smoked on the way down, and bonds go up, because that is about as dovish as you can get. So let me go over that again. In a key change to its statement announcing the decision, the Federal Reserve Open Market Committee omitted prior language saying that it expected the labor market would strengthen further. Instead, Wednesday's said monetary policy would help the labor market remain strong. That suggests Fed officials expect improvements in the job market to slow. The yield on the 10-year took off topside. The 7-2 vote for the rate move. The Fed's third this year raises the benchmark lending rate by 1/4 percentage to a target rate of 1.25 to 1.5. Let's see what else they have to say, because what you're going to have is that at the beginning of the year, too, there's a couple that have been voting, and that gets changed around. Let's see. In the latest set of quarterly forecasts released Wednesday, the median estimate for economic growth next year jumped to 2.5% from 2.1%. At the same time, the committee's median forecast for long-run expansion was unchanged at 1.8%. Minneapolis Fed President Neil Kashkari and Chicago Fed's Charles Evans both dissented against the interest rate decision, preferring to leave them unchanged. It was the first meeting with more than one dissent since November of 2016. Kashkari dissent was the third this year. Evans dissented for the first time since 2011. Interesting. Yeah, so bottom line is that the way the market's reading it, folks, the market's reading it as very dovish. That's how it shakes out. If we go to the XAU, the HUI, what you're going to see, the XAU right now is trading up 313. You're at 80.2 and 2 cents. That's inside the larger range. The HUI, the Gold Bugs Index, same type of setup. Gold Bugs Index is up 684. You're at 181.81. How about that? Yeah, 181.81. Pretty cool. That has to get back inside 184.81 in order to get inside that higher range. We go take a look at the strength versus the weakness inside the Dow Industrials. Strength out here is going to, well, it's always been these big numbers. You have Caterpillar putting 34 positive points, 3M putting 16, United Health putting 15, Boeing putting 14, taken away from it. The only big number out there is IBM. IBM's putting a negative 16, American Express negative 7, Goldman a negative 5. Inside the NDX 100, what you have point-wise inside the NDX 100, what you have out here, you have MELI putting 26 positive, is up 26 points. Priceline's up 18. NetEase is up 13. Regeneron's up 7. Taken away from it, NVIDIA's down 370. You get Charter Communications off 290. Amazon's down 245. Electronic Arts is off 173. And you can see when you look at the NDX 100, what's intriguing there is this, is that if you just looked at the aspect of what was up versus what was down, it seems that there's a lot more that are up or down. But when you actually dig into the full 102 stocks, because that's what we have in there now, I believe. The NDX 100 has 102 stocks because of Google. Bottom line is that this continues to have a hard time catching a bid, meaning to get up and over this price point of the last high, meaning the 64.46. We've got the 64.37. Right now you're at 64.30, and we'll see whether it can test the high of this morning once again. That high of this morning was the 64.37 area. It doesn't look to me like it's going to. The reason I'm saying that is that the volume, so on the first spike, which you always, get, when the Fed comes out with the statement, you had monster volume. You had 21,000 contracts. Well, we've already tested that. We just tested it again. So we tested it twice, and the two tests are pretty dramatic on lighter volume. The first test had 4,300 contracts on the 10-minute. This one here, let me see, we're only 3 minutes into it, but this one looks like it's going to be a lot weaker. Right now, 3 minutes is a little bit too early to really judge it, because you can have anyone come in with 200, 300, 400 contracts. But bottom line, it looks like it's going to fail. You fail there, and we are at, that would be at the 330 mark, because we're at 323 right now. What that would set up is that would set up that you get basically 30 minutes to 35 minutes coming into the close, that they're going to try to basically sell that baby down. We go over futures. Let's go take a look at the futures. I mean, the commodities out here, because of the fact that the dollar's getting smoked. You have silver up 2.5%. You get cotton up 1.6%. Copper's up 1.2%. Natural gas is up 0.8%. We have gold up 1.2%. On the way down, you have gasoline off 2.6%, off 4.5 pennies. Oil, heating oil is down 1.3%. Crude is off 0.6%. We go up and we take a look at the XLF, because the banks, they were on fire yesterday. XLF out here, trading down 21 cents. You're basically 28.01. That's still at the highs. Let's go take a look at the JP Morgan. Now, JP Morgan couldn't take out its high yesterday. It got up to that, baby. It just couldn't take it out. So that's backing down a little. That's backing down 81 cents. No big deal there. Let's go to Goldman, actually, because Goldman did take out all its highs from 2007. Goldman got to a higher high today. You're going to do 2.6 million shares, which is, by the way, that's pretty good volume on Goldman. That is saying on the weekly basis that Goldman, let's put it on the monthly, actually, anything over 250.70 at the end of this week basically is a break topside inside with Goldman Sachs. That was the high that Goldman had in 2007. Crashed to $47. What a trip that was. $250 to $47. It took until 2017, March of 2017, almost 10 years, to get back up to the 255 area. It did it. come back down to 210. Now you're back up there. This is one you definitely want to keep your eye on because of the failure the first time, and also what did happen with Goldman is that when Goldman failed and started pulling back, that was the canary in the coal mine at that point that the financials were going to pull back a bit. So as this gets tested, it's going to be really crucial because if that test fails, that's a big number because we know that Goldman gave us the heads up the last time, and of course it wasn't even a correction. It was just a small pullback. That small pullback, though, took, in order to get back up to the highs, it took quite a bit of time. You know, when we go take a look at this, what you're going to see is that Goldman, let's see. So, yeah, April to, what's the 2? Yeah, April to December to get back topside. Stay right there, folks. Come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrial's up 103. You get the NASDAQ up 22. S&Ps are up 2. So Fox, bottom line, it looks like they're going to sell their studio to Disney. This is quite a move, folks. Okay, where do you see this? This is, this is an aspect that here it is right here. It's pretty cool, actually. 21st Century Fox will retain its real estate portfolio, including 20th Century Film and Television Studio lot in Los Angeles, when it sells a large chunk of its assets to Walt Disney, according to people familiar with the matter. Fox is going to spin off assets, but it plans to keep after Disney acquires the studio, the cable channels, FX, and National Geographic. That's so smart, keeping the real estate, folks. If you can get someone, in this case they got Disney, to buy the studio, buy the assets, guess what? In Hollywood, you keep that studio and they're going to keep their space, forget it. It's really a sweet deal. And that shows that we are still in a market where lots of cash is trying to find homes. Fox real estate portfolio is vast, including properties in the U.S., South America, and Asia, according to regulatory filings. Being able to charge rent on those assets will add to the emerging company's revenue stream. The company also leases many buildings, such as its New York headquarters. The Fox film lot in Los Angeles has a long history, though. The runway budget for Cleopatra, half a century ago, led the Hollywood studio to give up part of the property to raise cash. That part is now a lot that now forms the business district of Century City. Pretty wild, man. So bottom line is that, let's go over to Disney for a second and take a look at Disney. So Disney trading 107.70. Yeah, this is still in the consolidation. Bottom line is that, you know, this is quite a consolidation. When Disney gets smoked in August of 2015, it went from 122 to 90. And it's still in that consolidation, you know. So this deal looks like it's going to try to get up into at least the 115 area. Right now, you're at 107. And it looks, I suspect what you're also going to have, once this Fox deal gets done, more than likely they're going to end up bringing that company private again. That's seems to be how this is shaking out. We get over and we take a look at the S&Ps. Let's go take a look at the S&Ps. The E-minis out here are trading. They got a high out here today of 26.75. You're at 26.71 right now. And on these Fed days, folks, it always seems to bring in some pretty good volatility. We got the volatility, you know, 2 o'clock, 3 o'clock, I tried to get up and retest the high of today. Got right next to it, too. Just barely missed it, actually. So now we'll see what it's going to do with the low. The low of today is 26.67. We're at 26.70. It looks to me like it is going to try to make a run into that area. Let's go over to Bitcoin and see what's happening with good old Bitcoin. So what we are going to have happen, I know that intraday out here, what we did do is that on the CBOE, there was a halt because what the Bitcoin did do is that it went from a price point up here of 17,230 to 15,752. That put the halt on. Bottom line now, it's basically back up into the 16,419 area. And come Friday, let's see, Friday, no, the 18th. Come this following Monday, we will have the CME. And CME is the largest exchange in the world. That is going to also be trading Bitcoin futures. I expect what we're going to see is that we're actually going to see more volume come in the marketplace. In fact, let me bring this up. I want to see what the volume is right now, because on the Bloomberg, we do get the volumes now. We get the last volumes. That's what we get. Okay, so, yeah, see, not much volume today. Today, thus far, and this is 10 minutes delayed, as of 10 minutes ago, Bitcoin did 1,513 contracts. That's not a lot of contracts. Let's go over to there to the U.S. dollar. Now, the dollar's been getting smoked. Dollar has price spread. Dollar had been going into the November downdraft. Last few days, couldn't handle it. That November 14th downdraft, that's when the dollar went from 94 to 93, 345. We got up to 93,800 yesterday. Today, you've done 16,000 contracts. You're at 93,060. Number one, I suspect we're going down to the 92,130. Test that area out. When you put this on a continuous contract, the bottom line is that the dollar looks that it very well could be a monster ABC down. You know, week of January 3rd, we're at 103. We go down, make a low, end of September at 90. This one here can bring this all the way down into somewhere in the, let me see, get this number again, 103, yeah, 13 bucks. Yeah, bring it down to 82. You get to 82, it's like, okay, so what is going on that we're at 82? You know, fundamentally, it's really hard to wrap your head around that they're going up on short-term rates, but yet there's more demand, and the demand is still there in the 10-year and the 30-year, and the dollar's getting destroyed. It's like, okay, because realistically, folks, it's supposed to be just the opposite. When you're going up on rates, it's supposed to make your currency stronger, and it's supposed to make bonds weaker. Well, it's not happening. If we go over to the TLT, you want to take a look at the 20-year bond fund plus, bottom line, that's going topside. That's going to need more volume. We did 6.8 million thus far. Last high was 11.8. We'll see. It's not rejecting price, though. It's going to go after it. And we'll just see what type of volume we got up when we get up into those levels. But bottom line, it's saying that it wants higher price. Some of the other Dow stocks out here, you have Big Blues getting hit. We'll look at that in a second. You get International Paper flat. Citigroup is down 63. You get GE down 13. GM is off 20. Let's go over to GE for a second. GE continues to just, oh, this is in trouble, man. This is in such trouble. It's amazing. So GE, put this back. Every time we look at this, for a market that has been this strong, it's pretty amazing. You know, GE is going after, you know, its high volume, at least the high of the low of 2009. And that high of the low is 1135. Right now, you're at 1778. At the beginning of the year, we were at 32. So the stock has got cut in half this year. It's pretty amazing when you think about it. The stock has got cut in half when the Dow Industrials have gone. Let's just go take a look at this for a second. So we bring this back. And so the Dow Industrials have gone from, yeah, we've got up 5,000 points. Yep, 5,000 points. Pretty wild. You stay right there, folks. We'll be coming right back. Last 20 minutes of trading. Dow Industrials up 123. NASDAQ is up 26. S&Ps are up 3. Gold's up 15.60. Silver's up 40 cents. Notes and bonds higher. King dollar is toast. Get the peanut butter and jelly out. Butter it up, baby. Coming right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow is up 113. You get the NASDAQ up 23. S&Ps are up at 2.5. Let's go take a look at the PPLT. So this is the platinum market, folks. This is the ETF for platinum. The low out here, and this was actually today, $83.35. You're trading at $84.53. You know, platinum, no doubt, has got smoked. Bottom line is that let's go look at the actual future first. PLAT, we get into the January. So you got platinum up $10. It's a start. That's the bottom line. You got to start out here. You want to see it. We're at 886. You want to see this contract, the January contract, back inside 895. Now let's go back to the PPLT. So the PPLT, that's trading 84.53, and you want to see another day of strength. Well, here, let me do this way. 1 second. Yeah, see what we're going against. Okay, cool. Okay, so this was also going against. Oh, this is nice. Okay, cool. So this was going against strength from February of 2016. Now, what you need here is this, because you come down to 83.35. 82.96 was the bottom. Cool. Okay. So inside, you want to see this get back inside $85.48, approximately $85.40 to 86. You get inside that. Guess what? What that says is that you're going to go back topside to $100, because that's the consolidation that we've been in. That's how that shakes out. We go take a look at OS. 1 second. No, AAOI. So this little baby here. This is intriguing. This is a stock that had got smoked. It's Applied Optoelectronics. They manufacture advanced optical semiconductor devices. The company designs products, diode lasers. The low for the year is $21.88. The high is $103. And what you're going to see, you bring this up in a 6 months, it's like, oh my God, it's a one-way trade. You bring this up on a year, it's like, oh my God, it's a one-way trade. Now what you do, though, you put it on a weekly, and I can see what a couple of targets are looking at. What you have is this. We had a sign of strength in November. Well, first off, yeah, that's a sign of strength. Well, first off, what we did is this. It came back in October on a weekly. 8.5 million, and it was going into where it broke topside from in February of 2017, 9.2 million. So it basically came back slightly lighter volume. Then you got the sign of strength from 36 to 46 the week of November 10th. Okay, so in that aspect there, I can see that, okay, can you get to $46? You might be able to. The danger here is this. When you come down something like this, that you've come down from $100 down to 36, until you actually take out a swing point, which this hasn't done yet, it's not actually telling you that it can get to higher price. That is the big danger of a dead cat bounce. And this is not taken out a swing point yet, a higher swing point in order to get the higher price. Because when you look at those equities, many times what can happen is that you get a sign of strength, you don't get to a swing point, then you get your next leg down. And so it's stop in, keep a stop in, because it's dangerous. Let's go to the XLE inside the oil and gas. What do you have there? Flat market, $69.51. If we do go take a look at the actual future, the crude oil today, this got spun around, $56.67. You've done 322,000 contracts out here. That is big contract volume. So now you're going to go after this consolidation that's been in place since November 5th. The high of the consolidation is 58. The low of the consolidation is 55. So now it looks like, hey, we're going to go after the 55. Going to see if there's enough sellers as it moves into that lower price. We go take a look at the copper contract. Oh, actually, I want to go to the FCX first. So FCX yesterday, folks, was breaking topside. Oh, it did it, man. Look at that. Broke out again. So FCX has been screaming that copper's going to go up, too. You know, we had copper go downtown and go downtown pretty quick a few weeks ago. But FCX just wouldn't back off, and the Southern Copper wouldn't also. So now you have FCX is at 1627. You get a high volume spike out here from January of this year. It's going to go after it, 1706. We put this on a monthly, and this is pretty impressive. On a monthly, yeah, the 1706 is game. Let's go to SCCO. This is Southern Copper. Yep, Southern Copper caught a bid too. Up 94 cents. You're at 43,225. And then a small one to Seiko TGB. It's up 4 cents. No big deal there. Let's go into the copper contract. We take a look at the copper contract. That's up 1.1%, or 3.5 pennies. And look at that. It's digging right into where we came down from last week. Last week we came down from 310 to 294. Bottom line, it's making its way back up there. Now, if copper gets one more day of 3.5, 4 cents, and it gets it tomorrow or the next day, what you're going to see here is that then that downtrend that has been in place since October 16th is broken. That's going to be a big number. Let me put this on a continuous contract. Let me take a look at the continuous contract. Oh, man, this continuous contract actually looks pretty good. Looks real good. Yeah. So in the continuous contract, you know, the leg that started in May of 2017, you're at $2.47. You get to 3.25, so it's 75 cents. This is saying the 3.75 is game, actually. Let me put this back a little bit more. $3.75. Where are you? Oh, I see. Okay. I see what's happening. Okay, so this is where the copper contract had a hard time 3 months ago. It was coming into the September 2011 downdraft. Now, that was a monster downdraft. Copper had gone down 25%. We went from $4.18 a pound to $3.08. That's going to take a few times to get up into that 308 bar. You know, the first time we came up, you got to 325, then you closed at 310, then it backed off. I expect we're going to go back up there, but that is quite a supply line that's laying up there. If you get if we get into it, I suspect we're going to get into it. You get into it, then you know we'll see what kind of basically demand we have. And if it could get into it like 5 or 6 cents, that would be a big number. That number would basically be generated and say, okay, guess what? It wants to go. You stay right there, folks. We'll be coming right back, and you can see that NDX 100. There's trouble in paradise in the NDX 100, folks. It just can't hold price. And when you get markets that are up to the moon and they keep telling you they can't hold price, this NDX wants lower price. Up 15 bucks right now. Come right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow Industrials are up 87. You get the NASDAQ up 12. S&P's down 1. That just went from a positive to a negative. And if we do go to the VIX, what you're going to see out here, markets is just getting a little bit nervous coming into the close. You just had the VIX turn around and go from a price point of a 966 to 989. Now the TVIX, and thanks, Mike, appreciate you putting that in there. The TVIX, which is the velocity 2 times short-term ETN. This is the 2 times the performance of the S&P 500 short-term fits. Futures, the different ball game than the VIX, okay? But bottom line is that this also just perked up its head. This just went, just the low out here today was 603. Now you're at 616. And that, what that's all about, folks, is that the insurance premiums are going up. We'll see how this shakes out next few days. What we will have out here is inside the NDX 100. You're going to have a failure on price and volume. If we go take a look at the Qs for a second. And on the NDX 100, you're going to have it. The Qs right here, we got into 156.49. So you got over the high of the downdraft. The biggest downdraft we have, that was 2 Fridays ago when they went from 156 to 153. You have 22 million. That was going against 71. You're going to close under it, and what that sets up is that now you can get a test of the low of and we'll find out whether it's a consolidation or not. But that low is at 152. Right now, you're at 155.98. The small caps, we take a look at the IWM. Small caps failed again as it went into the downdraft of December 5th. And that's 29 million right now. We did 25. What you want to keep your eye on the small caps is that will it have 29 million at the close? If it does, you wouldn't want to be shot in that because they'll go back up and test it. We go to the GDX, and you're going to see the GDX throw in some big volume at the close here. We only needed 51 million shares. We're already at 48. This thing is going to throw in about 60 million. So you get buyers, you have price spread. Bottom line, wants higher price. You stay right there, folks. We'll be coming back with some numbers after the close. Dow Industrials up 91, NASDAQ is up 14, S&P's up flat.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester. Hey, Marty, what's going on?
Hi, Mr. O'Brien. How are you?
I'm doing great. How you been, man?
Not bad. You know, you guys, over the time and with a few of your courses and seminars, you taught me how to fish.
That's a beautiful thing, brother.
Yeah, it's true. And so what happens is I still listen all the time, and to not only you, but some of the others.
Sure.
To, get an idea where the fish might be biting. As far as your services, they're a bargain. When you compare them to a certain prominent man with real estate courses at $35,000 and no contact with the lecturers afterwards at all, and you think of what you guys do for a few hundred, and you can get access and ask questions forever, it's a great deal.
No, we appreciate the growling problem with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Always do your best, but don't overdo. When you overdo, you deplete your body, and you go against yourself, and it will take longer to accomplish your goal. Market-wise, let's take a look at it out here. We had the Dow Industrials finish up 80, NASDAQ up 13, S&P's up 1, gold contract up $16.30, trading at $12.57 an ounce. Silver up 42 cents, $16.09 an ounce. Let's go over to that gold market right away. What do you have with gold? Gold caught a bid, silver caught a bid, bonds caught a bid, King Dollar got smoked. So, gold contract up 16 bucks. What we did yesterday it came down to the high of the strength from last July 14th. You rejected it. You go topside today. You have the price spread. You have the volume. I suspect now what you're going to see, we're at 12.57. 12.68 is the number. You get back inside 12.68, and you're going to have some big action. Silver also caught a bid out here. Silver was up 2.6%, 42 cents. Silver also had the price spread. Had the volume behind the move. That was up 82,000 contracts. We're at 1609. To get inside the higher range, you're going to be at 1665. We take a look at some of the equities. GDX also caught the bid, caught a really nice bid. Oh, look at that volume in GDX, man. The GDX volume always comes in at the end. A lot comes in at the end. We needed 51 million shares, folks. You get 71. GDX, that's monster volume. You get buyers. You're at 2216. Inside 2230 gets you in the higher range. That'll get you a price projection up to 2555, which is the high of September 7th. The SLV, we take a look at the SLV. That also caught a bid. That was up 29 cents, $15.15. That has to get back inside 1562 in order to get inside the higher range. Notes and bonds, bottom line, top side, here they go. We take a look at it, and this is just so ironic that the Fed goes up on short-term rates. The Fed says they want to go up 3 times in 2018 on short-term rates, and the market says, you know what, I'm going to buy. And as the market's buying, rates going down. We had the 10-year do 1.5 million contracts. You're at 124.20, monster move. Bottom line, 10 years going after 125.14, which is the swing high from the 13th of October. Now, the 30-year, different animal. The 30-year, folks, is really strong. The 30-year blew away at swing points. Swing points we're talking about as a consolidation going all the way back to September 22nd. 30 years up a full point, 298,000 contracts. Bottom line was game for that is 156.14. which is the highs of September. King Dollar. What do you have with King Dollar? Check it out. So King Dollar just couldn't handle higher price. Bottom line, you go south, you have some volume on the move. We did 16,000 contracts. You're at 93. You have a swing point at 92.130. I expect you're going to go after that number one. We'll see how it handles it. Very well could be a small ABC down, which would take it into the 90.68. And if that's what you get, what you're going to see is that you're going to see an aspect that this very well could be a much larger ABC structure down on a yearly basis. Because when you take this back, you're going to see that the first leg down was pretty dramatic this year. January 3rd, we were at 103 in the dollar. It goes down to 90, bottoms out in September. Does a nice counter trend bounce. Well, actually, it did a weak counter trend bounce. It was a 0.27 counter trend bounce. You get up to the price point of 95. You give it up. If we break that 90.90 and you have volume on that break, what that's going to set up, folks, is that's going to set up 82 King Dollar. Cryptocurrencies, if you want to see what kind of a bubble that we have in here, it's pretty amazing. I believe we had got a couple calls, I believe, on this stock too. Crypto company. So check this out. Companies rebranding themselves from cryptocurrency firms aren't the only ones benefited from Bitcoin mania. A crypto company today disclosed a private stock sale to accredited investments. Now check this out. At $7 per share. Now, that, folks, is a 97% discount from yesterday's close of $223. Now, how does that work? Check it out. Investors typically expect a discount in exchange for participating in these sales, but a markdown of this magnitude is rare, if not unprecedented. I've never seen a markdown like this. Bottom line here, I'll walk you through how this came about. The $7 offering was communicated to potential buyers weeks ago, before the stock surged more than 3,000% to its $642 peak on December 11th. Okay, so what is this stock all about? What the CEO is saying, we could have let the sale go on for a few more weeks and taken more money. The decision was made in consultation with our counsel that it was best to close it now. Crypto is not the only company in the space to offer shares amid soaring valuations. Hive Blockchain today announced a maximum 100 million Canadian, 77 private placement, with the stock up more than 3,200% this week. Last week, in Bitcoin Investment Trust announced it will resume its private placement, with shares up nearly 1,300% year to date. Bottom line is that, let's go bring this up. Bottom line in these stocks too, by the way, here, let me read the end of this, because this was up in Vancouver. We've talked about this a few times. You take a shell company, you turn it around, you change the name of it, and you go after a new product, or at least you say you're going after a new product. That's what this company did. This was a water company that basically was a shell. They changed the name of it. They changed the name of it to crypto company. And let's go see. I suspect they don't take in a dime. There you go. Oh, yeah, no. Hey, guess what, man? They took in $6,000 in the last quarter. $6,000. So check it out. People are going to lose so much money here. It's disgusting. They have a market cap, folks, of $6.1 billion. You got to be kidding me. Yeah, they got a market cap of $6.1 billion, and they took in $6,000. How's that? And they just sold the stock to the insiders for $7. You had a $314 stock. They just sold it for $7. You think they're going to sell into the marketplace? Unreal. You stay right there, folks. We're going to come back with our man, Mr. Chris Gaffney, the president of Everbank World Markets. Coming right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we had the Dow Industrials finish up 80. NASDAQ was up 13. S&P's up 1.5. Gold contract, big bid, up 16.70. Silver, big bid, up 42 cents. King Dollar got smoked, folks, down 690 ticks, trading at 93.01. Let's go over to our man, Mr. Chris Gaffney, the president of Everbank World Markets. And, folks, as you come over to our website at TFNN, you'll see the banner right on the right-hand side. Hit that banner, and what you're going to see and what you're going to bring up, foreign currency accounts. And we're going to walk through this with our man, Mr. Chris Gaffney. And what I want to walk through first is that we have the Federal Reserve bottom line go up on short-term rates 25 basis points. And guess what, folks? Evidently, the market is not believing it because bonds go up, metals go up, and King Dollar gets smoked. Chris Gaffney, welcome back to TFNN.
Thanks. It's great to be on your show again.
I'm telling you, man, I love that you always come on, and I want to thank you for the Fed Day.
Yeah, we time it right. It's always an exciting time to be on. There's plenty to talk about.
There is. And now, so can you walk us through, I'm trying to figure out, Chris, right? The Fed goes up on short-term rates. The dollar gets destroyed. It's like, walk me through that a little.
It's all about the future. Traders are less worried about today's move. Today was baked in. Everyone knew or felt the Fed was going to go ahead and go with a quarter point.
Yes.
What they're looking at, they're looking forward.
Right.
As investors typically do, they're trying to see what's going to happen in the future. And right now, there is some dissension on the Fed about whether or not to go up this time. And I think investors are starting to question whether or not they're going to go ahead and move forward at the same pace that's predicted. With three more.
You can see it, and I guess inside the statement, folks, what you had inside the statement, the one part of the statement that did change, and that's where the dovishness came in as to the aspect of the labor market. They thought that they changed the wording, and they changed it just a bit. But the bottom line is that the key change in the statement, the Federal omitted prior language saying that it expected labor markets would strengthen further. Instead, today's, they said that would help labor markets remain strong. And so with that aspect, folks, you had that dollar go south. So now, as you're over at TFNN, folks, when you hit the banner, we're bringing up foreign currency. So let's talk about currencies, because these currency accounts you have are dynamite. And it is counterintuitive, like I said, but bottom line is this dollar looks like it's in trouble.
It is, and there's this year's it's been a tough year on dollar, and next year we expect it to continue to face some challenges. So a way for investors to benefit from a weaker dollar is to buy into some of the currency markets, and we make it easy to do that. We've been doing it for a long time at Everbank, and we make it very simple to convert some of your cash from U.S. dollars into foreign currency, and then we can hold it for you in an FDIC-insured deposit account right here at Everbank. So it's a simple way to buy the currencies and to benefit if the dollar continues to fall.
Yeah. Now, as if you're in your car, folks, I'm just going to you remember this program's always archived. You can go to just Tiger TV and watch the archive, because what you're going to see on the right-hand side, the different accounts. You get the World Currency CD accounts. You get the World Currency CD baskets. We get the Access Deposit account. We get the Automatic Purchase Plan. So can we walk through, because it's pretty cool that you not only can just, let's say if you have daughters, sons that are going to Europe, that's a nice way. Bottom line, summer's going to be here before we know it. Kids going to school, that's a great way to hedge, right?
Sure. You can buy the euro at $1.18 right now. Not so long ago it was trading at $1.40, $1.50 even. So
yes.
It's relatively cheap right now. If you're looking to do some traveling, why not buy the currency now at these levels? And if and when the currency moves up in value, you've already got those euros purchased, or Aussie dollars, or even some of the more emerging market style currencies, the Brazilian real, the Russian ruble.
Yes.
You can get some great interest rates in some of those currencies, and yes, they can tend to be pretty volatile in currency fluctuations, but there's a lot of people and a lot of indications that the emerging markets are going to continue to be the place to be. And if that's true, if those emerging markets do grow at a good pace, their currencies should appreciate versus the dollar. So not only are you going to get some really good interest rates in the emerging markets, but you also maybe get some the currency plays. So you can get a double gain there, and that's really something that you can't find elsewhere.
You know what I love? When you pull this up, folks, you're going to see the last sentence in this one, foreign currencies. You never restrict yourself to national boundaries, so why should you restrict your money? It's so true. I mean, because we're in a one-world market now.
Right, and you know, we see you know, some of the precious metals have, you know, while some have run up dramatically, and gold had a pretty good day today.
Yes.
You know, it's another way to hedge, just like the precious metals are a way to hedge your portfolio. Currencies are another asset class that are non-correlated, so they don't move the same direction typically as equity markets or bonds, and therefore it's a good hedge for the overall portfolio.
You know what? And what I didn't, you know, as you're going over, folks. So picture, you know, you're doing business in Europe, you're doing business in South America, you're doing business in Asia. Great way of doing it. Now, diversification of your portfolio. I see in here we can actually do a CD too, right?
Right. It's 3, 6, 9, or 12 months. So those CDs typically are designed for the countries that have better interest rates, and so
nice.
They automatically roll over. Again, they're going to fluctuate up and down in value, but it's a way to lock in for a longer term and actually earn some interest. And that purchase plan is another for individual investors, for those folks that want to take a position and know they want to take a position, but they don't know about the timing. A purchase plan is a great way to establish a position in currencies. We'll let you invest as little as $100 a month. It's doing it over time, and therefore you use dollar cost averaging to work your way into a position, and it's a great savings tool.
And you know what's so cool is that what happens here, folks, is this, is that the education value that you're going to get as to a true diversified portfolio goes up dramatically. I mean, you know, we get a lot of young people out here too, Chris, okay? So this is the type of plan, you know, I'd say a lot of these young people are more tuned worldwide because of social platforms, right?
Sure.
But this is a great way to get attuned to what's going on in the currency market at $100 a month.
Yeah, and you know, it'll keep you involved certainly with what's happening on the global markets. And as we see the global recovery gain steam, which most people believe we are going to start seeing gain steam, you're going to see the currency markets react, and you know, you may see a country like Brazil recover back as the commodities come back, or Australia and New Zealand are two countries that have a lot of commodities that they ship out into the rest of the world. And so if you find a country that you know you're interested in, like you said, you can take a position in their currency and hold it right here at Everbank.
Chris, thank you so much. Always a pleasure. Have a great one. Have a safe one.
Hey, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And when we talk about our man, Mr. Chris Gaffney, you just go over to our website at TFNN, folks. You're going to see the Everbank World banner right there. You can hit that banner, bring it up. Bottom line, Everbank, their phone number is 855-750-4051. That's how you can get hold of them. It's 855-750-4051. Or you can go right through our website at TFNN. Great accounts over there. Let's go to our man, Mr. Rick in Natick. Hey, Rick, what's going on?
Hey, Tom. I'm doing well.
Good, man.
Hey, can you take a look at CGNX for me? And do you, based on volume characteristics, do you think this is going to test its highs again?
Let's take a look. We got Cognates Corporation. They develop, manufacture machine vision systems. The low is 31. The high is 62. That was established on November 22nd. Let's see what we have. Oh, yeah, no, this is trouble. Okay, let me pull this back. Yeah, this is volume off the top, man. This is trouble. So
what do I need to see?
Okay, so first this is what we got. So let's go back to the last time with volume on the way up. That was August of 2017, right? You went from 47 to 55. Nice volume, right? That was an ABC up. So let me see where the most... This is a tough one to figure out where that A point is. I'm going to go 24... So it's $24. Yeah, that's what. Okay, if I take the A at like $24, November 2016. Let's call it $25. $24.84. Okay, we just ballpark it. $25 to almost 50. So let's say it's a 24.8 to B. Your C is 42, which gives you what, 66, right? You hit 72. Now see how we hit 72 on the weekly at 7.4 million.
Right.
And then we come off it with 22 million. We come off it with 13 million. That's dangerous, man. That's saying, number one, it wants to go down to the high of that, the last time on the way up, which is 55. Let me put this in a monthly for a second.
Yeah, it was a recent split, so that was at 110. Is that so? As it approaches that 110, if volume lightens up.
Okay, now I see what you're looking at now. Okay, so that was on the weekly. Now, okay, so now the question was, is it going to go back and test the high? Now, the way this is set up, yes, it would test the high, because on the monthly, it's a high volume high.
Right.
That being said, I would still put a stop in it ASAP, and this is why. I'm going to show you something. So this equity, folks, went straight up from $14 up to 72. You get a high volume high. But you finish the ABC structure up. You finished everything about it, right? Now watch this. I have a few of these that I've been trading forever. I'm going to bring you over to Great Panther. Great Panther right now is at $1.20, just so I can show you how these operate. Now Great Panther also has a high volume high at $5, right? From 2011. Now, my take is that, yes, that's going to get tested. But you see the expansion on Great Panther, because we caught this, okay? Great Panther went from 65 cents in August of 2010, and by March of 2011, it was at $5. Bottom line, see that you come all the way back to the breakout here because the extension was too much. And then if I take this and I put, I can't, let's see, no, I can't get it. Maybe I can get it on the 10-year for you. Yeah, I can get it on there. Okay. So what you're going to see is that you got up there, and Great Panther also come off that high and had some volume. The danger is that you have the CGNX, is that you do have volume off the high, and you very well probably have an ABC down too. And if it's an ABC down, it's a big one. 72, it's 12 points, which would get you into 56. Yeah, see, that's actually, if you do this right now, if you do this number right now, I just ballparked it, but it looks like it wants to go to 56, and 55 is that high of the last spike on the way up. You see what I'm saying?
Right. So as long as it doesn't break below that with heavy volume, I should be okay, correct?
But this is what you have there. If it gets to there, it's going to close the gap at 47. See that?
Okay.
Let me ask you something. Okay, so you work for Cognis, right? Don't you? Do you? Yeah.
I don't want to say that.
Oh, no, that's all right. No, that's all right. No, this is because this is my point. If you have an option account, this is what I would do. Okay, so watch this. You could turn around if you're going to hold a stock. If you're going to hold a stock, folks, what happens is that, particularly if it's great when you work for the company, because then what you can do, you can go on the other side, and I would be selling calls. Okay? And if you have an option account, this is basically, you're going to collect premium even as this is going down. So January, let me make sure I get the right ones. Okay, so yeah, January, you know, bottom line is that, look at this. These are high prices. You could sell, you know, basically in January, you can sell 60 calls right now for $4. So that would insulate you to a certain amount if you'd be happy with getting called out. That's how that works, okay? If you don't trade options, don't do what I'm suggesting here, okay? But if you...
I don't know.
Yeah, okay. So, but it's okay, that's enough said. So you just got to figure out, you know, do you put the stop in, or do you take the heat, you know? I guess the other...
I'm willing to take the heat, but I just don't know for how long.
And that's the problem. And
right.
I would say to you to move some of it out. That's what I would do. You know, but you don't see equities go from $14 to $70 in 2 years. It doesn't happen. Do you know what I'm saying? So if we take a look at, okay, so well, I see why it did it. You know, you guys grossed. You went from 353 million in 2013 to 740 million this year. It's a big number.
Right.
And it looks like 2018 is going to be fine too. You're not accelerating as fast as you did. It looks like the biggest acceleration was from 2016 to 2017. Yeah. So if that's the case, everyone's, you know, you have a good problem. That's the bottom line. And so when you have a good problem, this is the way to look at it. Sit down with your wife, groove, no music, no nothing. Think of what you have right now share-wise, right? Then what to do is think about if it goes down $20, are you still going to be okay and you're going to be happy? If it goes down 25, you're going to be happy. Or are you going to take it now? That's what I do when I'm having a battle saying what the difference will make in my life. Do you know what I'm saying? So if you get a score, I say, okay, I understand what you're saying. You're going to pay the tax on it. Big deal, okay? But the bottom line is that you say, okay, if I sell now, this is what I have. What am I going to do with it? If I do take a hit, am I going to be all right with it? And if you are, then you are. It's an easier way to struggle with the aspect of selling something in general. That's what I've found.
Yeah. Okay.
Good luck, man. You have a great problem. That's the bottom line. So, You do?
Yeah.
Hey.
I know.
Cooking, brother. Have a great one, man.
Right,
Have a
thanks.
safe one. Thanks for calling. You stay right there, folks. We had the Dow Industrials finish up 80, NASDAQ up 13, S&P's up $1.50. We're coming right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's go over and take a look at Pier 1. Pier 1 going south. Pier 1 closed at $5.84. It's trading down $1 at $4.58. Let's see what they're having to say. Let's see what we got. So net sales forecast, let's see. Okay, so same store sales are down 1.5 to 3.5%. The estimate had been, oh, man, this thing got killed. Estimate had been 41 cents for the year. Now they're looking at 17 cents to 25 cents. Big number, man. Big number. Holy cow. Their margin is 37%. It used to be 39.5. Well, this is look at this. This is a danger. Their inventory is down 12%. So bottom line is that they're running into cash deals too. Chart-wise, what you're looking at out here is that this went in the last 3 weeks. It went from 428 to 584. So that went up with the market. It's going to go right back down overnight. And if we put this back, what you're going to see is that this has been a dog for a long time. It was trading at $25 in 2013, and now it's going to go after the lows again. Let's go to Mike in Loveland, Texas. No, Colorado. Hey, Mike, what's going on?
Hey, Tom, we're on the road. My 10-year-old son and I were just rolling, and we noticed that yesterday the SPY failed on price and volume by 2 cents, and today it looks like we failed by 6 cents. What do you think?
So he's looking at 266.80. There's no doubt.
Yep.
That's the number. Bottom line is that you got above it. Yesterday it closed below it. Today we closed below it. And what you do have here is this, folks. In both days, you don't have price spread. These are little tiny dojis that are hanging up there. So you do have that aspect of it. On the weekly thus far, let's see, we got 2 more days left. You're dealing with 270 million versus 520. So, you know, on a weekly, you'd want to close under the same number, and it looks like we're going to get it, you know. I mean, if you're looking to go south, I would suggest that you get into the NDX 100 shot. The NDX 100, so we look at the Qs here for a second. What you're going to see is that the Qs not only failed, but they haven't been able to hold a bid at all. You know, the S&P hasn't held a great bid either, Mike, okay? But the Qs seem to be much weaker. So, you know, we got to 156.49 today. That got over the downdraft. The correlation is 24 million versus 71 million. And what you do have identifiable inside the NDX 100 are the SMHs. The SMHs brought the NDX down fast and furious, and the NDX, the SMHs, you know, continue to be really weak. And when those chip stocks go south, man, they go south really quick, you know. But to answer your question, there's no doubt.
I just could not believe the SPY gave it up. I thought for sure that we were going to hang in there, and then it just kept slowly crawling, and at the end it just got hit and hit and hit, and I'm like, uh-oh.
And it got hit. It got hit
good. That's not good for them.
You know, when I have this up, folks, you know, someone threw 9.3 million shares. That's, you know, almost 10% of the SPY volume. They threw it in right at the close. You know, so that did. When we take a look at this on a, you know, intraday chart, it broke the swing points, you know, and broke them with some decent volume. So that is suggesting that overnight the S&P itself is going to have a tougher time holding higher price. I mean, that's how that's set up. And, you know, the wild card here is going to be the type of volatility that we have, I suspect, inside this U.S. dollar. Because, you know, today was definitely counterintuitive in the aspect that the Fed says, they went up. They said they're going to go up 3 times. But the market turned around and says, you know what? You're still dovish. And we're not believing you're going to go up 3 times. That's one aspect of it. The bigger aspect, I would say, is that, I mean, it seems to me the economy's doing great. We're going up and all this, right? And because everywhere you go, folks, there's, you know, you want a job, there's signs everywhere for jobs. That being said, it's like, why is that dollar getting destroyed? Well, that dollar's getting destroyed because the market's saying the Fed, the rates are not going to go up. So there's something that's hanging out here. So, well, I mean, maybe the tax bill will be so good, folks, that our deficit will, you know, we're all going to pay a lot less taxes. But what may very well happen is that the economy doesn't accelerate as the administration says it's going to accelerate, and that dollar's going down because the deficit is going to go through the moon. So for a few years, we'll all have a lot more cash, but bottom line is that if that happens, you know, that could be an indication what's going on with that dollar. That, you know, bottom line is that the deficit is going to go up dramatically. So.
Hey, Tom, give a quick shout-out to my son, Owen. He's my timer in training.
That's a beautiful thing. Owen, what's going on, brother?
Hey.
Hey, how you doing?
Good.
Good. So when were you born? What month?
Mom's at home.
No.
With my sister.
What month were you born?
Oh, in January.
January. See, that's my accent. That's wicked. January. 10 years old. That's a beautiful thing, man. So.
Yeah, I'm showing them all the charts and stuff and showing them what I'm looking for, and maybe someday we'll be in business together.
Yeah, listen, it's the younger that anyone, I think, starts looking at patterns in general, it's repetition, man. You know what I mean? It's repetition, it's seeing it, and it's understanding it. And, just always remind him that we're in the probability business. And I think when you understand that you're in the probability business, your possibilities go up dramatically. Because when people think that they're in the investment business, that's when I think problems take place. Do you know what I'm saying? So,
yeah, he likes puzzles. So
how cool is that?
He'll probably be all into this technical analysis stuff.
Well, that's good. Well, you call us again, and I want to talk to you. Oh, that's a great name, by the way, Owen. That's a strong name, man. I like that name. Yeah.
Thanks.
Cool. Okay.
Thanks, Tom.
Hey, thanks for calling. You have a great one. Have a safe one.
Thanks. Merry Christmas. Bye-bye.
Merry Christmas. Happy New Year. Let's make it a great one. 2018, folks. Can you believe it? That's insane. 2018. Yesterday's gone. Tomorrow's not here. What are you doing right now? And it's so important to keep that wrapped around your head, folks. I was looking at the yesterday. They had an article in the New York Times, I think, in the science section. It was the science section. It was great. And what it was about is it was about emeralds and what it takes, how long it takes for an emerald to basically develop. And it's like 1.6 million years to 1.8 million years. You read something like that, and then you see the beauty inside an emerald. Then you think that, our lifespan is like an ant. So enjoy it. My point more than anything is enjoy it. I love reading those articles because what they do, they get you centered really quickly. Okay, so it takes could you imagine 1.4 million years, or just even a million years? Hey, how about 10,000 years? What does happen though, which I really, as you do get older, there's no doubt, you can think back 300 or 400 years pretty easy. Because that's like, 5, 6, 7 generations. That's not a big deal. So we've come a long way just in that small amount of time. You stay right there, folks. We come right back. Dow up 80, NASDAQ up 13, S&P's up $1.50. Gold, silver, they caught the bid, folks. Coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So some of the higher volume stocks out here today. Finstar was up 440. Now, what this is all about, it's kind of intriguing too, is that this is a fiber optic company, a chip company, and I believe Apple basically granted them some big money. So, yeah, Apple is spending $390 million to boost production from a maker of laser technology that's critical to the new iPhone X, such as facial recognition. Apple's products can stretch the manufacturing capabilities of suppliers. Is going to invest in Finstar Corporation from a $1 billion manufacturing fund announced earlier this year with the aim of creating more American jobs. Finstar will use funds to reopen a plant in Sherman, Texas that will employ 500 people. Finstar's shares surged 32%. So you can see that bottom line is that Apple is pushing some bread around, and that's a good sign in general. But they need suppliers. You know, what is happening? There's so many consolidations that are taking place inside the chip business that what you do have is that that can take manufacturers south and takes manufacturers south very quickly, folks, because the expense is one thing, but you know what? It's the order of where are your orders in it. They need these to do what? They need these for phones to push out, and that's where I suspect that whole thing has gone. Inside the gold market, the silver market finally caught a bid, big bid too. GDX was up 74 cents, 82 million shares. That's what it needed. That had the wide price spread. We only needed 51 million shares. You got 82, big number. XAU, same setup. XAU was up 2 to 2.99, trading $79.94. HUI, Gold Bugs Index, also caught the bid. Gold Bugs Index traded up, let's see, what do we get there? We got up 644. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking right back here, 9 o'clock tomorrow morning. Wow, go get them, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.